Good afternoon. Shares in the Asian region were mixed as investors in the region continued to assess the risk from simmering tensions between Ukraine and Russia. Japan's Nikkei shed 0.4% and mainland Chinese stocks closed higher. Locally, we had a flurry of trading statements starting with retailer Massmart that flagged a wider annual loss of up to 1.6 billion rand, hurt by store damage and lower trading income due to looting during the country's civil unrest last year. That share price is down 1.5%. And then we had Africa's largest mobile operator by subscriber numbers, that is MTN. Its profits for the year would probably rise up by up to 35%. They didn't give a reason for that particular performance. However, that share price was up 0.7%. And then we had insurer Discovery forecasting a higher half-yearly profit supported by new clients at its highest health insurance business and adequate provisions to cushion the impact of the coronavirus related claims. To talk to us about the market dynamics and also take a look back at the week that was, we are joined by Warwick Lucas from Galileo Securities. Warwick, thank you so much for your time. We have a lot of our global peers that are mixed right now. Investors still assessing those geopolitical tensions. Is our JC market still holding up?
Well, it's just managing to. You know, we had a fairly weak start. Mondays was pretty rough, and the JSE has basically drifted sideways to a bit better on the week. And our rand was a bit firmer on the week as well. Our resources shares seem to go better than most, and even though we've got an underlying commodities indices tending to sort of consolidate their gains, our resources shares did quite well. But I think most notable is the likes of the US bonds. You know, that US 10-year bond is steadily persisting in its attempts to push over the 2% mark, and it looks like it's getting there.
The one thing that has been fascinating has been the gold price performance. I mean, at this point, slipping, I suppose, as investors take a breath. But what was driving the gold price when you look at some of the news that came out this week?
Okay, so I mean, obviously inflation concerns globally remain in place, although supposedly there's a lot of transitory factors in those numbers, a bit of one-off prices in the likes of oil and so on. But I guess gold is also a political hedge, and of course we've seen the stresses in the Caucasus highlighting that. I mean, none of the language seems to be being used a few moments ago. We saw there being particularly helpful. And, you know, I always say to clients that if they ever make money from a gold investment, it probably will be because of circumstances arising that really are quite detrimental to the world in general.
All right, so locally we had some trading statements out, as I mentioned, Discovery, MTN, Massmart. Which one of those caught your attention?
Look, I think they're all quite notable in their own ways. I think both the Discovery and MTN ones quite positive in the sense of they talk to a theme of an ongoing rebound in the local economy to some degree. Massmart is also quite a humdinger. I think part of it being there, of course, that if we actually slice and dice the numbers up, what you can see there is that while in the second half of 2020, Massmart actually broke even and looked like it was recovering. And then, of course, there was a second half of 2021 with all the unrest and so on was absolute murder on Massmart, and in conjunction with stores getting broken into and ransacked. I mean, there was a loss of confidence generally, and of course the company had been embarking on some quite difficult turnarounds and restructuring. So all in all, quite a horrifying year for Massmart. I'm sure they're glad to have 2021 behind them.
Right, and on talking about Massmart, one of the analysts I spoke to described it as a catastrophe, and he said, I mean, if you look at their headline loss from continuing operations, around 1 billion rand, and then the stuff that Shoprite is inextricably acquiring, and that loss is even higher. When you look back, what happened with this particular company? I mean, there was a point around 2012, 2013 where the share price wasn't as low as it's sitting right now.
For sure. I mean, it's actually struggled for quite some time. And I think in terms of it was a takeover that never really went right either. And I think they're now sort of suffering from an accumulation of errors, and that's now reached the point where the restructuring or the corrections are quite dramatic, and to some degree, such drastic fixes can obviously carry a heck of a lot of risk. I mean, obviously, it's possible that what we're seeing is that while you're writing everything off, they effectively are kitchen sinking. I mean, that's certainly possible, particularly given the noisiness of the environment. But yeah, that can make for a very tricky period.
Right. Before I let you go, one key event that you are keeping an eye on.
Well, I mean, the ongoing issue is what's happening with the whole transition in terms of interest rates in the States. And I mean, basically central banks with easy money, governments with easy fiscal policy basically kept the show going. And we're now coming to the situation where the bill is getting presented, and that bill can show up in the form of potentially higher inflation, and obviously the risk of interest rates to deal with it. And certainly, I'm keeping an eye on that U.S. bond market, that 10 years. I mean, that's going to be quite a tricky sort of second half of the year, watching how that matches up.
All right, Warwick, thank you so much for your time. That is Warwick Lucas from Galileo Securities. That is it.